Hello, traders. This is Ophir with ForexPlaybook.com. I did want to offer a brief update today. Take a look at what's going on with BP, the Gulf oil spill, and the article that was written earlier this week, Gulf oil spill tragedy finding short value in BP. And also take a look at some economic data releases yesterday and today that have continued to disappoint, and that we expect to weigh on markets going forward. Of course, that's a not a day-to-day view. That is a longer or medium-term view, anyhow, as far as market movements going forward. But let's start first with BP and what occurred yesterday here with the stock. Obviously, today the stock is trading very narrow, as it was yesterday, as of course until it eventually went straight up. But right now we do have the testimony of BP CEO Hayward in front of Congress right now, and that is obviously going to keep the shares trading in a very narrow range. But looking at what occurred yesterday, the news events yesterday, which was in fact very much important to our position here, our short position in BP, and that is starting with the $20 billion fund that BP has agreed to set up at the urging of the White House and several congressional members and Senate members as well. Many investors, you look at this chart right here, many investors took this as a sign of clarity for the stock going forward, which in my opinion is completely a complete misjudgment, really. What this is, in fact, is evidence that BP is in fact caving into government pressure, as had been expected and written about in this article. Now, the truth of the matter is that as far as BP shareholders are concerned, caving into government pressure, while the nice thing to do, is not necessarily the right thing to do. It just opens the door to further, more severe demands going forward, and really exposes BP to a great deal of liability, which is why we're seeing BP bonds getting hammered, essentially. I mean, again, people are pricing in complete foreclosure for this company in the months ahead. So it really is not good news for the company, despite what the market might, or some traders anyhow, might make of it. And again, other news that we're looking at or have been looking at as far as BP's situation is obviously that Bank of America release. Bank of America will not be handling or is reducing its counterparty exposure to BP trades of durations longer than 12 months. So that again is also very bad news for the company going forward. Now, on a day-to-day, unfortunately, we did not see the price decline, the immediate price decline that we had been expecting, despite the stock opened lower and looked as though we may have gotten what we were looking for heading into yesterday's session. But of course, the meetings that took place and the announcements afterwards did not help our position in the immediate term. But again, longer term, we're still pretty bearish on this stock and expect this trade to pay off pretty handsomely. Let's take a look now at the economic data that has really moved markets, again, slightly lower. I mean, the Dow, the S&P, we're looking at, half of 1% declines here, even less. So it's not really a huge event day, while in fact this data that we're receiving is extremely disappointing. Starting first with let's start with yesterday's actually release on the housing data, which, as we have been expecting, again, another short recommendation a couple weeks back. This was on June 2nd to short home builders, and the anticipation that the home buyer tax credit was having a much greater impact on housing than many analysts were giving it credit for. We of course saw right through that, and since the expiration, we have seen demand for housing literally plummet since May. I mean, again, the April 30 expiration and immediate decline in demand afterwards. So the data that came out yesterday as far as housing, again, we just saw housing starts fall apart, and we did not see the corresponding sell-off in these home builders as we would expect. I, of course, have a short position in KB Homes. It is down today, again, mildly. This is not a huge decline. In fact, it's not even at its lows from the last couple weeks here. It traded as low as $12. I'd have to refresh my memory as to where exactly I shorted the stock. I think it's somewhere around 14. So it's not bad, but again, I'm expecting much more severe declines for the stock. You look at recent trading in the last couple weeks here. We've gone from a approximately $12 low. This is a Yahoo Finance chart, so we can only give it so much credit. But again, around a $12 low to as high as 13 and a quarter or so. That was actually a one-day spike where I saw the shares jump from 12 to 13.25. Which really surprised me. There was really no good reason for that outside of a short covering rally, which is going to happen. So we can't be too surprised by that, I suppose. But now let's look also at the unemployment claims that came in today, and that also is pointing toward. It's just the lack of recovery in the employment picture. Period. We have seen a trend in employment and unemployment claims that have pinned these claims to the 450 to 475,000 range over the last several weeks, and this has not yet changed. Today came in at 472,000 new claims, initial claims of unemployment benefits, up 12,000 from the previous week. So again, we're looking at how this trend is going to manifest in the economy, I would assume in a very negative manner going forward, which is part of the shaping of my particularly negative view on markets in the longer term. Again, on the day-to-day, we look toward the technicals to deliver what we would expect for the price action. But as far as the longer-term view, the fundamentals will always take precedent. The technicals will begin shaping themselves toward the longer-term fundamentals. That's the idea behind it. But now let's also look, lastly, at corporate earnings seasons, which is really getting underway now, and we are seeing a number of big corporations warning or offering reduced guidance going forward. They're citing such things as consumer sentiment or consumer demand being affected recently. They're looking at currency fluctuations, and several large companies are now warning that going forward earnings will be reduced. Now, another thing that we need to keep in mind here is the global debt crisis and how this affects corporate earnings. The bottom line is that global credit markets have been a little bit difficult for corporations to handle. I mean, the rates being asked for, the yields being demanded by investors is more than a lot of these corporations are willing to pay. And keep in mind that these corporations go to the debt markets, they issue debt in order to expand, in order to hire, in order to undergo big projects that are supposed to positively impact earnings as well as the broader economy in the months, the days, months, years ahead. That's just the way this market is shaped. And as we see them again drawing away from this debt market that has these rather high expectations of yields, we are going to see that manifest in earnings going forward. So again, not looking too good in terms of the earnings picture here. By the way, a couple of the companies mentioned here, we're looking at McDonald's, Best Buy, FedEx, Nokia. I believe Heinz had warned last quarter about the currency valuations having an adverse effect. So this is something that we'll be following, of course. Outside of that, we will be obviously paying attention to testimony today in terms of BP Chairman Hayward, what he has to say for himself. Obviously, I wouldn't say obviously, but in his words, he is devastated. There was a nice headline here: BP Hayward is devastated. So that's good to know, I guess. Outside of that, we'll wrap it up for now, and of course, you can look forward to more briefs, more video content being added hopefully on a daily basis. Do my best to add it daily. Hopefully, it gets to the point where it's even more than once a day. Outside of that, any questions come up, as always, you can feel free to contact. We had a number of great responses to the first video, and I appreciate all the feedback. One response I'll address right now was my rambling fashion, and I do want to let you know this is an unscripted sort of a video presentation that I'm offering here, so I will ramble. I may get off topic here, but just to answer that one question I received, but it was a complimentary email, so I do appreciate it nonetheless, and of course, all feedback is welcome. So we will talk soon, and good trading to you all.